Welcome to this explainer. Look, if you've been anywhere near tech or finance lately, you know everyone is obsessing over the staggering rise of Nvidia. Today, we're going to unpack these structural advantages, what analysts call an economic moat, that are keeping them firmly at the absolute top of the AI hardware market. If you really want to understand why this company is dominating, we have to look way beyond just the microchips.
Here is our agenda based on Morningstar's analysis. First, unprecedented revenue growth. Second, the CUDA competitive advantage. Third, the in-house chip threat. Fourth, avoiding vendor lock-in. And finally, future valuation and risks. Let's dive right in.
Section 1. Unprecedented revenue growth. Okay, to really grasp the stakes here, we have to look at the sheer scale of Nvidia's financial success in the data center space. To put things into perspective, back in fiscal 2020, which honestly wasn't even that long ago, Nvidia's data center revenue was sitting at about $3 billion. At the time, that was a totally solid, healthy number for a hardware company expanding its footprint. But man, fast forward to fiscal 2026 estimates, and that number literally explodes to an incredible $194 billion. I mean, that is not a typo. That's just the reality of this completely insatiable demand for AI, large language models, and the crazy amount of hardware required to actually run them. And there's no sign of hitting the brakes. Looking just a little further ahead, analysts estimate this revenue is going to surge to a staggering $361 billion by fiscal 2027. That represents an astonishing 86% annual growth rate, completely fueled by tech companies just racing to build out their AI infrastructure. So what's driving this exponential rise? It's a fundamental shift in how data centers are actually being built. Nvidia literally looks at every single new gigawatt-sized data center and sees a $50 billion opportunity for their products. $50 billion! And with a clear line of sight to dozens of these massive facilities being built this decade, the ceiling here is just incredibly high. All right, Section 2, the CUDA competitive advantage.
So, you might be wondering, how exactly did Nvidia build this massive economic moat that lets them capture so much of this spending? Well, it starts with the hardware architecture. Think about the difference between a CPU and a GPU. A CPU uses serial processing. It's kind of like reading a book word by word or processing an image pixel by pixel from top to bottom. But NVIDIA's GPUs, they use parallel processing. They throw thousands of smaller cores at a task to process the data all at once. Basically, they take a full, instant snapshot. And it turns out that parallel approach is exactly what you need to run complex AI algorithms efficiently.
But here is the real secret sauce. Hardware is only half the story. Nvidia took an early, visionary lead by developing something called CUDA. Now, CUDA is a proprietary software platform. It's got the libraries, the compilers, and the development tools that AI professionals use to actually build their models. And the kicker? It integrates seamlessly and exclusively with Nvidia's own chips. And this is what builds their moat perfectly. As Morningstar notes, Nvidia benefits hugely from high customer switching costs around CUDA. What this means is that developers are writing their AI code specifically for the CUDA platform. Trying to port that highly complex AI code over to some completely different GPU ecosystem, it's a nightmare. It's incredibly difficult, it takes forever, and it's wildly expensive. So developers basically get locked into NVIDIA's ecosystem.
The big takeaway here is that this deep integration, marrying that super-efficient parallel processing hardware with deeply entrenched proprietary software, forms the unshakable foundation of NVIDIA's dominance. It totally secures their revenue pipeline. Even if a rival comes along and builds a chip that matches NVIDIA's physical specs perfectly, they still have to convince developers to abandon years of CUDA coding. Good luck with that.
Moving on to Section 3, the in-house chip threat. Now, no moat is totally invincible, right? NVIDIA's biggest customers are the hyperscalers, the massive cloud providers, and let me tell you, they are highly motivated to find cheaper, in-house alternatives so they aren't totally reliant on a single, expensive vendor. Looking at the landscape, you've got AMD. They're well-capitalized with great hardware expertise, but they're playing catch-up from a pretty weak position on the software front. But the real structural threat? That comes from the hyperscalers themselves. We're talking about Google developing custom chips like their TPUs and Amazon building Trainium. To be clear, these in-house alternatives aren't guaranteed to just magically beat a general NVIDIA GPU across the board. However, because they are custom designed by the cloud providers, they can be highly optimized to perform specific, targeted AI workloads incredibly well, and often way more cost-effectively for those very specific tasks.
Which brings us to Section 4,
Avoiding cloud vendor lock-in.
Okay, so this creates a really fascinating dynamic. If Amazon and Google are making their own custom chips that work great, why doesn't that just absolutely wreck NVIDIA's competitive advantage right now? Well, the defense against this threat is actually driven by the end user, the enterprise customer. When enterprises rent cloud space, they demand a full menu of accelerators. Think about it. If a company optimizes its massive, super expensive AI model specifically for Amazon's custom Trainium chip, they are effectively trapped in Amazon's cloud forever. An enterprise is absolutely loath being locked into a single cloud vendor. They want the freedom to pack up and take their AI models to Google or Microsoft if they can get a better deal.
As a result, even if hyperscalers really want to push their own chips, they are essentially forced to keep offering NVIDIA's universally compatible neutral hardware. If they don't offer NVIDIA's GPUs, their enterprise clients will literally just take their business to a cloud provider that does. This dynamic acts as a massively powerful shield protecting NVIDIA's market share. Finally, Section 5, Future Valuation and Risks. So despite this fortress of a defensive position and their massive market cap, Morningstar actually slaps a very high uncertainty rating on NVIDIA's stock. The bears, the skeptics of this endless climb, make some really vital points. First off, the pace of AI spending could easily slow down if the actual return on investment for these massive AI models just doesn't materialize. If companies stop seeing profits from AI, that infrastructure spending is going to crash. Second, a huge chunk of NVIDIA's revenue comes from just a handful of massive tech companies, and every single one of them is highly incentivized to diversify away from NVIDIA. And lastly, you can't ignore the geopolitical risks. Things like US restrictions on selling high-end AI chips to China literally limit a massive potential growth market. Ultimately, NVIDIA's entire sky-high valuation is intimately tied to the unpredictable pace of AI build-outs over the next few years, for better or worse. We are in the very, very early nascent stages of this technological shift. The market is incredibly dynamic right now, and while NVIDIA is sitting securely on the throne today, the ground beneath them is constantly shifting. So, we'll leave you with this final, provocative thought. The bulls are projecting anywhere from $3 trillion to $4 trillion in annual AI infrastructure spending by 2030. Given the sheer mountain of capital projected to flow into this space, is NVIDIA's tightly integrated hardware and software moat truly impenetrable? Or are we just watching the opening battle of a much, much larger, multi-decade war for the future of computing? Thanks for joining us for this explainer, and definitely keep your eyes on the data centers.